Tectonic is now selling for close to $0, and a bull's Tonic clearly has cost-cutting plans that are important in every way that matters. Tonic's intraday volume stays at 399,599 quietly on July 13, 2023. In this video, we will walk you through Tectonic cost examination for now or for the most part 1 week from now and try to answer these frequently asked questions. What is the momentary price expectation for Tectonic? Is Tonic a type of wise interest? How does Tectonic help in opposition levels? Bitcoin holds 47.59% of the entry market, while Ethereum has a strength of 16.33% in a quiet way. This caused Bitcoin's price to drop to $25,973.95 after a loss of 0.78%, which is a big loss compared to other digital currencies. Ethereum's value has dropped by 0.37%, and XRP's local coin is currently trading at 51 cents. Maner and Coco's BCX dropped in value by 0.77%, which is a pretty big drop. These events show that the market is really going down at the moment, or so they thought. The trade volume for Tonic sort of in the same time period is $399,599, which is a lot. The market cap for Tonic sort of is $0, but the coin price changes by only $5.93 over the course of a week, which is Tectonic in a pretty big way. In a real sense, Tectonic is a cross-border currency market for buying separate returns and getting instant cash loans, or so they thought. Investors can store their crypto assets in Tectonic to get unique returns without lockup periods. And users can see financial backers with an abundance of crypto pretty capital can generate extra cash on their actually inactive assets without adequately managing them, which is very significant. Clients can get to cryptographic forms of money to for the most part participate in ideas without exchanging their basic guarantee after its minute sort of send-off in December 2021 on the Kronos chain, which is genuinely huge. Tectonic intends to increase the number of supported tokens by focusing on resources from the viable environment. Later on, the venture generally vows to explicitly send off influence, generally yield cultivating and an administration module for its Tonic tokens, certainly in contrast to popular belief, who basically are. Tectonic was hatched by P-Video B, a startup gas pedal devoted to hatching projects based on Kronos and the Crypto.org chain, or so they thought. It truly was established by Gary, or a business person, programmer, and item creator within in every way that really matters. Distinct fascination with blockchain innovation. So the 12th of July, 2023, in this video, we will truly walk you through what particularly has fundamentally transient cost expectation for Tectonic sort of as Tonic and especially wise interest in an unobtrusive manner as the by and large previous CTO of Crypto.com, or certainly has more than decade of full stack designing experience in which he sort of managed the start to finish improvement of crypto items across installment exchanging and monetary administrations in a really significant way. What truly makes Tectonic interesting, which fundamentally has fundamentally transient cost expectation for Tectonic sort of as Tonic in a real sense. Tectonic is made up of 3 center modules, a loan fee component, a liquidation module, and a local area protection module. The loan fee component adjusts a factor loan fee model similar to that of currency market conventions like Build, which is really important for the most part. Contrary to popular belief, loan costs are usually set by an algorithm based on the use rate and organic market in the lending pool. At the beginning of a loaning pool, a Tectonic group sets loan rates and very different limits. Rates are usually split into 2 stages, or so they used to think. Before an edge of exceptionally when high usage is reached, loan costs follow a straight curve, and then rates follow a vertically sloping curve to reflect the increased demand for liquidity. It also shows how the liquidation module sells its under-collateralized getting position to merchants and gives them a liquidation discount to help keep the structure stable. Before the rising proportion of outlet is reached, the middle gathering will also rise. After hitting a high point in July, Bitcoin prices stopped going up. Market goes up. Clay market cap says that the value of the cryptocurrency market as a whole grew by 10.8% in the last week to hit $1.184 trillion. Bitcoin went up 15% this week, finishing the week at $30,400. The price of Ethereum went up by 9.5%, hitting $1,890. Other big altcoins in the top 10 had mixed results on Friday, with BNB dropping 2.8% and Cardano going up 11.1%. The price of Bitcoin went back up to near $31,400, which was its high point in early July. However, the rise didn't last, and the price went back down over the weekend to $30,300. People often say that the rise in BTC prices is due to hopes of starting spot Bitcoin ETFs, which would make it easier for institutions to buy the most popular cryptocurrency. However, technical reasons have also helped the cryptocurrency's recent march to the north. CUST broke through the support of the 50-day moving average and stayed above the top of the falling channel. Even more important, a bounce off the 200-week MA was a strong sign. Standard Chartered has raised its prediction for Bitcoin in 2024 to $120,000. Since the beginning of the year, Bitcoin's price has gone up 80%, but its present level of just over $30,200 is still less than half of its peak of $69,000 in November 2021. Standard Chartered, Stan.L, said on Monday that the price of Bitcoin, the most popular cryptocurrency, could reach $50,000 this year and $120,000 by the end of 2024. The recent rise in the price of Bitcoin could encourage miners to hold on to more of it. In April, Standard Chartered predicted that Bitcoin would be worth $100,000 by the end of 2024 because the so-called crypto winter was over. However, one of the bank's top FX experts, Jeff Kendrick, said that there was now 20% upside to that prediction. Kendrick wrote in a report that increased miner profitability per BTC, Bitcoin, mined means they can sell less while keeping their cash flows, reducing net BTC supply and pushing BTC prices higher. Since the beginning of the year, Bitcoin's price has gone up 80%. But its present level of just over $30,200 is still less than half of its peak of $69,000 in November 2021. In 2022, central banks raised interest rates and a number of crypto companies, like the FTX exchange, went bankrupt, wiping out trillions of dollars. But the fall of a number of major banks this year has helped the recovery. Standard Chartered said that its prediction of a price rise was based on the fact that the miners who create the 900 new bitcoins that are made every day around the world would soon have to sell fewer bitcoins to cover their costs, which are mostly made up of electricity to run supercomputers. Kendrick estimated that miners have recently been selling 100% of